It's no big news that the stock market has been crashing and dropping like a rock, especially ETFs. In one day, just one day on April 4th, 2025, the S&P 500 saw one of its largest drop of -6% in one day, amidst all the other big one-day drops over the course of history in the stock market. Now, this presented a great buying opportunity that I of course took advantage of and bought thousands of dollars in my ETF portfolio and deployed all my cash into ETFs in this stock market correction or the stock market dip. We have VOO, or the S&P 500, down over 13%, schd, a very popular growth ETF, down almost 19% on the year. And maybe some of you bought into the semiconductor hype where it's now down over 26% year to date of SMH, that one high-flying growth ETF. Now don't worry, because I feel the tension and I'm actually down quite a bit of money on the year, especially in my own ETF portfolio. I'm down exactly $8,376.19 on the day, or -5.85% all in one day. And then of course I lost another big lot of money in one day of exactly $7,054.11, or 4.89% all in one day this week. Now there's nowhere to hide in this market. Everything is red and everything is down. Now in this video, I want to equip you with the best tools on how to survive this ETF crash and come out calm, cool, and collected so you can feel super confident in this ETF environment and this current market cycle. So let's get started in this video. First off, why I'm making this video? Well, first of all, I genuinely care about you. Yes, I really do care about you as an investor. I want you to succeed as much as possible right now in the short term and even the long term as well. Personally, I care about your investment success more than my own investment success, and that's just the person that I am. I want you to succeed in any market environment, whether we are in a recession, bear market, bull market, and everything in between. I also want you to invest in the stock market properly, whether that's strengthening your mindset or just encouraging you to buy the dip and remain calm, cool, and collected. I love and want to be as transparent as possible. I think transparency is super important because I love building my trust in my own channel as well as my own portfolio, and I want you to navigate this market from my own buying strategy and just to see my own portfolio as well for full transparency in this video. And lastly, I want you to feel super excited and just super eager to invest in the market because it's a great time to be an investor. When you think about it, it's a great time to be an investor. Right now, prices are cheap, so let's go and let's get going and buying all these ETFs in your portfolio as well as mine as well. So to begin this video, I want you to first of all ignore the fear. There's going to be people on social media, news articles, and just breaking news headlines that only talk about the worst things happening from a recession or telling you to sell all your stocks and ETFs, saying that the world is going to come to an end, which is so crazy and that this is so bad that investing sucks. And overall, I think that listening to these headlines is just not productive and not healthy, especially if you're a long-term investor. And as a long-term investor, we have decades upon decades of investing, and just don't freak out right now. And I don't like how people on YouTube and just the internet freak people out with all these clickbaity thumbnails and just
these crazy faces on the internet.
However, if you do listen to the noise, it can result in quite a few things. Number one, it might cause you to be an emotional investor and just cause emotional investing. Basically, emotional investing is when you buy ETFs or stocks randomly that don't align with your own goals, your own strategy, and your own risk tolerance and just your own preference as an investor. Maybe you got emotional, maybe you sold everything without thinking of the bigger picture. This causes you to get scared, panic, and just freak out, which is super bad as a long-term investor. And overall, if you listen to these bad news headlines, this will just change your mindset to a short-term investor versus a long-term investor, which is what this channel is built on, which is the wrong way to go about investing, especially in ETFs. Now, everybody's been wondering, what have I been doing? I'm 24 years old and I have quite a bit of money to invest in the market, so I'll answer that question right now. Now, I've been investing about $5,000 to $6,000 every single month in all my ETFs in my ETF portfolio. Now, during this dip and this correction, I've been buying all my favorite ETFs like VOO mostly, QQQM, SCHG, SCHD, VTI, and DGRO in all my ETF portfolios from my taxable account, my Roth IRA, and my 401k as well. Now, if you want to see exactly in real time when I buy my ETFs in my own ETF portfolio, when I go ahead and buy the dip, check out the link in the description of this video to download Blossom, which is a free investing app, and there you will see my whole entire ETF portfolio and my buys in real time for completely free. Like you see on your screen, it will be in the app for completely free on Blossom. Check out the link in the description. It will also be in the pinned comment section as well. So on Blossom, as you can see, I've been just DCAing and dollar cost averaging, chilling, relaxing, because I'm super excited to buy all my ETFs in my portfolio. portfolio. Now I repeat, I don't plan on selling any of my ETFs in my portfolio. I just plan to be a long-term investor, keep on buying, and I have a ton of cash on hand to invest, which is why I've been investing throughout the dip, as well as if the dip keeps on dipping, I have enough money to where I can buy the dip as much as possible. If it keeps on dipping, I will buy and buy and buy and buy and buy. Now, how have I been buying, you may ask? Well, I've been buying slowly but surely. Now, even before the market started correcting, I was still buying all my ETFs in my portfolio on a weekly basis, no matter what happened, because I was a long-term investor, dollar cost averaging down as the market kept on dropping, and even as it kept on going up or just staying pretty flat, I was always a buyer. Now, I did this because I had cash on hand to buy throughout the dip, as well as if the dip keeps on dipping. I think you should always have cash on hand to take advantage of these super cheap prices and to invest in your portfolio, to fuel your portfolio with lower prices, to get a better yield on your dividends, to get a cheaper share price, and to overall get in at a better price than if you did before, if you didn't buy the dip and if you didn't buy stocks when they were on a fire sale. Now, I've also been buying ETFs at the end of the day, specifically power hour or in the last hour of the stock market just before it closes, to capture the lowest prices possible for all the ETFs in my portfolio, and you should too as well. Now, basically, this is where the most volatility in the market occurs at the end of the day, and you'll see exactly why right now. Now, if you guys want to see exactly this hack that I discovered on how to buy ETFs at the lowest price possible in a red day, check out this video right here. Go ahead and check it out. You won't be disappointed on how to buy the dip properly on a red day, especially in the last hour. Now, long story short, I do most of my large buys at the last hour of the stock market, where it's a super simple hack to buy ETFs and stocks at the lowest price possible most of the time. Okay, so with all that out of the way, here's exactly two ways and two things you could do to survive this ETF crash. Now, a quick disclaimer is that this strategy only works if you have high quality and long-term and diversified ETFs or stocks. Now, think your S&P 500, your broad market ETFs or index funds, growth ETFs, dividend ETFs, and blue chip profitable companies, etc. However, this strategy does not work if you have speculative positions, think bad unprofitable companies, leveraged or inverse ETFs, meme stock plays, day trading, you get the drill. So the first strategy, which is my strategy of choice, is to buy the dip and don't wait. First off, number one is to have a long-term mindset. Now, it's easy to say that this time is different, and honestly, every time is different when ETFs crash or when the stock market crashes. But honestly, we have decades. Think where the market's going to be in 5 years, 10 years, 20 years, 30 years, 40 years. Just have a long-term mindset and be optimistic for the future. Number two is to dollar cost average or DCA and chill. Now, I think that we all know by now that the best way to invest in the stock market is to just DCA, chill, kick back, relax, let your money work for you, and be a long-term investor, and just don't freak out and dollar cost average, S&P 500, VOO, and chill. You get the point. Next up, no one knows the bottom or where the bottom's going to occur, when it's going to happen, everything in between. Yes, no one knows the bottom, not even Warren Buffett. No one has a crystal ball. Just be a long-term investor. Will there be more upside? Potentially, of course. Downside? Maybe. We don't know. Time will tell. No one knows. Not even Warren Buffett. Not even me. Number four, and super important, is to note that time in the market beats timing the market. Now, number five is that corrections are completely normal. And lastly, having buying power to buy the dip on deck. Because the worst thing you could do is just run out of money and just have no money to invest in the stock market. When stocks crash, don't be that person. Have money, work harder, take another side job, work more hours, cut off expenses, and just have more money to invest in the stock market when stocks or ETFs go on a fire sale. Now, the second strategy is to do absolutely nothing, and I call it playing dead. Now, maybe you ran out of money, which is super common. Don't you worry. It's a lot of people don't have a lot of money right now, and a lot of people I've seen ran out of money to buy the dip. Now, you got to think that people have different salaries, life circumstances, and some people got trigger happy and bought the dip way too early, but that's okay. Don't worry, because you're not alone. Other people are in your boat as well. Of course, time in the market always beats timing the market. I will say it again and keep on saying this. Time in the market over timing the market. Number three is to hold and don't sell. Reason being that if the long-term trajectory of the stock market has been positive over decades upon decades, then the best thing you could do is to just wait for the market to recover if you believe in the long-term trajectory of the economy, but also the companies that you invest in and the ETFs you invest in as well. Next up is to breathe and reflect, relax, take a deep breath, because everything's going to be okay. We're not going to die. The world's not falling. The sky's not falling. Take a deep breath. Everything's going to be okay. If you're freaking out, panicking, just going haywire, maybe consider if your portfolio is right for you. Are the ETFs fitting your goals, your risk tolerance, your time horizon? Can you stomach volatility? Are you really meant to invest in ETFs? Can you really invest in growth ETFs? Are you really a dividend investor? Are you really a broad market investor? Think about all those things and reconsider your positions if you are freaking out and just panicking right now. Now, are you regretting going all in on growth ETFs? Are you regretting going all in on Nvidia, all in on semiconductor ETFs, all in on all tech stocks? Just think about it for a second, relax, recoup, reflect, and really reconsider if your portfolio is truly diversified and if you can really handle the volatility of the market right now and in the future as well. What's going to happen next? Now, I don't know, you tell me, because I don't have a crystal ball. No one knows. Now, will there be more downside? Maybe. Will there be more upside? Definitely. How long will this last? Who knows? But the goal and hope for me is for you to stay long term and have a positive mindset in the stock market right now and in the future as well. Think of the bigger picture. What's your goal out of this? What is the reason why we're investing? Now, my favorite thing to do is to say to myself, when in doubt, zoom out, or Warren Buffett's quote of be fearful when others are greedy and greedy when others are fearful. I want you to feel super excited because there's going to be a great amount of wealth transferred from other people to your accounts if you just buy the dip, be a long-term investor, and it's going to be a while for us to recover back to all-time highs. Markets don't recover like in a week or a day or even a month. It's going to be quite a while. Just be excited and be optimistic about the future and your ETF portfolio. So with that, if you guys like this video, please give it a like because this cute puppy did, and don't forget to subscribe as well. Of course, check out Blossom. It will be in the link in the description of this video and in the pinned comment section as well. Download it. I will give you a follow back. You'll see my portfolio. You'll see my buys all transparently, all on Blossom. I will see you there on Blossom. Now check out this video right here if you guys want to see exactly how to properly buy the dip like a pro, like how I've been doing and others have been doing at the end of the day. I love you guys so much. Continue to crush in the stock market and take it easy. I love you guys so much. Peace.